in compliance and automation. Over the years, Wiptel has grown in a trusted name in the industry, and here's why. We have a legacy of over 24 years continuously innovating in the field of compliance and enterprise solutions. A strong team of 500 plus professionals with expertise in SAP, Oracle, Microsoft, and more, ensuring top notch service delivery. Serving a diverse clientele of 37,000 plus global clients from large enterprises to SMEs, helping them enhance efficiency and growth. Our solutions extend across 5 plus countries, including India, the Middle East, Malaysia, Mauritius, and the USA, ensuring global accessibility and impact. Let's take a look at our journey so far, how we started and how we evolved into what we are. Webtel Electrosoft was founded in the year 2000 with a vision to simplify complex compliance processes. What started as a small team of compliance professionals has now grown into a company with over 350 experts, including chartered accountant, legal consultants, IT professionals, and industry specialists. In the year 2000, we began our journey with a focus on tax and compliance automation. By year 2002, we launched India's first compliance automation software, setting new industry standards. In 2010, we expanded our portfolio to include HRMS, payroll, and ERP integration solutions. By 2016, we strengthened our presence across India with multiple branches, enhancing our support network. In the year 2020-23, we took our solutions global, expanding into Saudi Arabia, Malaysia, and Mauritius. Looking ahead to 2020-24 and beyond, our focus remains on enhancing compliance automations and driving digital transformation worldwide. Our journey is a testament to our commitments to innovation, growth, and delivering value to the businesses worldwide. Our expertise and commitment to excellence have earned us the trust of some of the most renowned business globally. Here are some of our valued clients who rely on Webtel for their compliance and automation needs. Each of these businesses has chosen Webtel as their trusted compliance and automation partner, and we take pride in delivering solutions that empower them. So our first speaker is Mr. Tushar Agarwal, sir. He is a CA and he is a co-founder of Tatvam Group and co-chairman of ITD Committee of PhD Chambers of Commerce and Industries. He has more than 13 years of experience in indirect tax. He specialized in indirect tax litigation and advisory and handling investigations. He worked for more than 8 years with Lakshmi Kumaran and Sridharan attorneys. He was also deployed by GST for GST implementation and has worked extensively in designing of GST returns, audit, and other formats. He has been an active member of various trade associations such as PhD Chambers, ASSOCHAM, Credit, etc. Is actively involved in taking up the issues of various industries with various governmental authorities. He has authored various articles and study papers on GST and has been speaking on various platforms like PhD Chambers, ASSOCHAM, Webtel, etc. and shared his views with e-journals such as Economic Times, e-paper, Times Now News, and India.com. Business Insider, etc. And our next speaker is CA Chetan Agarwal. He is a seasoned tax advisory professional with over 14 years of experience. He has worked with leading firms like Sark and Associates and Lakshmi Kumaran and Sridharan. Chetan specialized in advising national and multinational companies across sectors such as fertilizers, real estate, and hospitality on indirect taxes, compliance reviews, and tax efficient structures. A domain expert for GST, he has led GST implementation projects, handled tax classifications, and provided industry focused GST trainings. He also contributes to industry publications, draft representation for trade associations, and manages indirect tax compliances. Today, we are presenting a webinar on expert analysis on GST Insight 2025 ISD rules, year end compliances, and IMS Simplified, presented by CA Tushar Agarwal and CA Chetan Agarwal. So now, without further ado, we will turn the time around to Mr. Rajiv Khandelwal, sir. So over to you, Rajiv, sir.
Thank you, Saloni. So we have very vast topic today, the GST insights and ISD and IMS and year-end compliances. So many things. I wonder how the speakers will take all these issues because they themselves are full-fledged topics. Anyway, I'm sure they'll just do justice with this, particularly with respect to ISD. I am very concerned because I think the preparedness is not there, the understanding is not there, and in many cases it is mandatory. I think they will tell us. Is the voice not clear? Can you hear me?
Sir, it is audible to us.
Okay. So if anybody is having a problem, you should please log in again. So regarding ISD, Tusharji, I think we need to make them understand many things. I think it is mandatory that wherever it is applicable, they should take registration, even if the transactions are not there. So these kind of issues are there, and how to make them the vendors understand. So some billing is to be done at the HO level, some billing is to be done as ISD, some to the branches, and so many issues will be there, particularly in ISD. So please take that in a detailed manner so that the understanding is there. So whatever professionals have joined in, they should look into for the clients, and for corporates, they should understand that this is really essential that we get registered as soon as possible. Otherwise, there will be penalties, etc., and even ITC may be disallowed. So all those issues are there. And here, let us very clearly understand whether it is IMS, whether it is ISD. Technology will play a key role because so many things have to be done. Bifurcation of expenses, eligible, ineligible, related to the branch, particular branch, related to all the branches, which is to be divided based on the turnover of the previous year, based on turnover of the last quarter in some cases. So these things manually, if we do, definitely there are going to be problems, there are going to be issues. So it is better that we take the help of technology, which will help do all these things in a seamless manner. So with that, I'll end my speech, and I would request Tusharji to take over and guide you accordingly. Thank you so much.
Thank you, sir. Thank you so much, sir. I'm just sharing my screen. Good afternoon, everyone. Friends, in this session, I will be taking ISG versus cross-charge topic, and thereafter my colleague Chetan Agarwal will be discussing the year-end activities from GST perspective and overview of IMS. So let's start with the first topic, ISD and cross-charge. Friends, ISD has become mandatory effective 1st April 2025. Therefore, we will study the concept of ISD and its related provision. Thereafter, we will see whether the concept of cross-charge still hold good when ISD has mandatory. Am I still required to do cross-charge after 1/4/2025? And if yes, what all expenses will be routed through ISD and what all expenses will be routed through cross-charge? Thereafter, we will also see the practical problem being faced by the taxpayer and the industry, and what is the practical stand we have to take while implementing ISD in our organization. Before we start and discuss the concept of ISD, one basic principle which we all have to keep in mind. Friends, please note that GST is a GSTN based concept. Under the GST law, every GST registration of the taxpayer is deemed to be a distinct person. Say I'm a manufacturer having a corporate office in, say, Gurgaon. I have my plant in Maharashtra, Ahmedabad, Tamil Nadu. Each plant has separate GST registration number. From GST perspective, each of such registration is a distinct person, separate legal entity from a GST perspective. Section 16 of the CGST Act, which deals with input tax eligibility, specifically provides that ITC is eligible if your goods or services are used in the course or furtherance of your business. So when I say it is used in the course or furtherance of business, it should be vis-a-vis that particular GST. Say in my Maharashtra factory, I manufacture Pepsi. In my Gujarat factory, I manufacture, say, chips, Lays. Now, if I have taken the services of advertisement of Pepsi, I can take the credit in the state of Maharashtra only. So I have to see my eligibility of my goods and services vis-a-vis the GSTN. It should be used in the course or furtherance of business of that particular GSTN. It is not possible that my plant of Pepsi is in Maharashtra. I take advertisement services related to the Pepsi and I take the credit, say, in Gujarat or some other state where this business is not done. The eligibility has not to be seen from a PAN angle, from a PAN perspective. It has to be seen GSTN wise, state wise. Now, in such situation, there can be certain services which are used by almost various other, all the locations, say SAP license. I have implemented SAP in my company. In such, I have implemented, say, I am downloading a software, Webtel software for GST filing, TDS filing, which will be used by my various GST registration number. Now, this particular services is being consumed by my head office, by my manufacturing plants, by my depot. So, under the concept of GST, this credit ultimately should be distributed to various states. I cannot take the credit in one state since each of the state is consuming these services. One option is I ask, go to the vendor, tell him to raise separate invoice state-wise. Another option is what comes into picture, the concept of ISD. So ISD is a mechanism which allow you to receive tax invoices from your vendor and distribute it to your distinct person through a proper ISD mechanism. So all your common services which are being used by various registrations by your various states, but invoices are raised on a particular single GSTN number, you can register yourself as an ISD and get this particular credit distributed to the various states to which it belongs. Let's take an example. SAP implementation service itself. I will register effective 1/4/2025. I have to take a separate registration as an input service distributor. I will apply and take a separate registration as an ISD. I will tell my vendor whose services are commonly used, say SAP implementation service, audit services, some brand advertisement service of the entire group, which are attributable to all the recipients. I will ask my vendor to raise its invoice on my ISD number, and then from an ISD number, I will distribute this credit to my various GSTN basis the turnover of those GSTN. So this will be distributed. So ISD is just a distribution mechanism. And this concept was also available in pre-GST regime. If you go back to the excise era, in excise, every plant used to have a separate registration number. But for the common services which are consumed by various plants, ISD mechanism was there, and similar mechanism in GST regime is also there. The purpose is to make sure the credit reaches to the correct state where the services are ultimately consumed. Moving on to the concept of cross charge. The next issue is whether the cross charge is still relevant after ISD has become mandatory. The answer is yes, cross charge is still relevant. Cross charge is, please appreciate, cross charge per se is not a phrase defined under the GST law. It got its existence from entry 2 of Schedule 1 of the CGST Act, which provides that supply of services between distinct persons, even without consideration, is taxable. So, cross charge is a concept in respect of internally generated services supplied by one entity, one registration number to another registration number. Let me take an example. There is an R&D center which I have opened, say in Bangalore. I have a manufacturing plant in Maharashtra, Tamil Nadu, other states, and in Bangalore, I have an R&D center. I have a proper office, proper setup. I have machines, I have employees, I have availing various input services there. I'm developing R&D, and whenever that particular R&D is generated and developed, I give that rights to the manufacturing plant, say in Maharashtra, etc. So there is a provisioning of R&D services from Bangalore, Karnataka to your plant in Maharashtra. Similarly, there is a head office located in Gurgaon. That role of head office is to provide support to the various manufacturing plants and depots across India. Per se, head office does not have any output liability, but the team sits there, the marketing team, the tax team, the management team. They play a wide role in providing general management support and business support to various registration. And in the course of providing that support services, they avail various input services which are consumed at head office only, which is fully consumed at head office. Say rental services, rental of head office, maintenance, housekeeping services. All those services are fully consumed by the head office located in Gurgaon. And these services being consumed by the head office are used for providing output support service to the various plants and depots. So head office will raise an invoice for the support services provided by from Haryana to various location, and all these rental, maintenance, housekeeping services which are fully consumed there, the credit of the same will ultimately be transferred through the cross charge mechanism by making an output supply from Haryana services to the Haryana registration to the various plants and depots. So cross charge concept is in respect of internally generated services provided by one state to another state. I will give you one more example. I'm a works contractor. I have registration in various states and I provide output services from respective state. If I got a contract in Maharashtra, I will do my billing from Maharashtra. If I got a contract from Haryana, I'm doing billing from Haryana. If I got a contract from UP, I'm doing my output billing from UP registration. But for providing that works contract services, I have purchased certain equipments in the state of Delhi, my registered office. I purchased various equipments where my head office is located. These I availed the input tax credit of these equipments, say cranes, forklifts, machineries, other types of equipments. These equipments are being used by various registration number. If there is a project in UP, equipment moves from Delhi to UP for the execution. If there is a project in MP, my equipment moves from Delhi to MP. Whereas the credit of this equipment you have taken in the state of Delhi, but you are using this equipment in other states, helping them to provide output service from that respective state. So there is a supply of such equipments and machinery services from your head office to your various GSTN number, which again will involve raising a GST invoice from your head office in respect of usage of such machinery in form of rental or lease to the various registration number. So these are some of the examples of cross-charge services provided by one registration number to another registration number, which is still valid even after ISD has become mandatory. So ISD in respect of input side, wherein you distribute the credit of common services, cross-charge in respect of output, wherein you provide services from one registration to another registration, you have to charge GST on that. Before ISD had become mandatory, there was a lot of confusion in industry. Some people were complying both with cross charge or ISD. Somebody was complying with ISD, somebody with cross charge, and some people were doing nothing. In 2023, government came out with a circular and they divided the nature of services into two parts, what we also discussed. One is third-party services. Second is internally generated services. For third-party services taken from third party like audit services, SAP implementation services, which are commonly used, the circular said, since there was no clarity, you can opt for cross-charge mechanism or ISD mechanism. ISD is not mandatory. Anything can be opted. You can distribute the credit either through ISD or through cross-charge. Now, for all third-party services, which are attributable to head office as well as branch office, which are commonly used, ISD has become mandatory. this benefit of circular can be taken only for the past period, not after 1/4/2025 when ISD has become mandatory. So all third-party services which are commonly used across your business has to be routed through ISD mechanism. For internally generated services, that is the support service by head office to the branches, or the R&D service by Bangalore R&D center to my manufacturing plant across India, or the example of provisioning of crane, all those cross charge examples which we took. For internally generated services provided by head office to branch office and any other internally generated service, the circular clarified that if my full credit is available to the recipient, even nil value is acceptable. Whereas if full credit is not eligible, then salary is not required to be included. So what circular has clarified for internally generated services, that is for cross charge, you can take any value if entire ITC is available to the recipient. However, if entire ITC is not available to the recipient, in such situation, at most you should not include the salary value. Otherwise, all other expenditure has to be included.
So Tushar ji, that means कि still we do not cross charge क्योंकि nil value की वो बोलते हैं तो भी okay होगा internally generated services के लिए.
Sir, what we are advising is for internally generated services, if your full ITC is available, at least for services which are fully consumed at head office, like rental service, maintenance service, etc. I will be taking the example also. Let us cross charge that, because rental ultimately, the rental credit has to be distributed. Now, since rental is fully consumed at head office, so it is better to route through cross charge mechanism.
Okay.
So ISD also has to be followed. Cross charge also has to be followed. Let me take few example and discuss each of these example. Audit services, professional services, GST consultant services. These are the services consumed for the entire group. Take ISD number, ask your vendor to raise invoice on the ISD number and distribute through ISD. Second is rental of head office. Since this is fully consumed at a head office, better to route it through cross charge mechanism. Life insurance. Now, life insurance is commonly used, but the credit of life insurance is not eligible. Since the credit of life insurance is not eligible, still the ISD law mandates that you have to distribute the credit of the ineligible credit also to the respective recipient. Since life insurance is taken from the entire organization, the entire GSTN number, the entire company as a whole, but invoice comes on ISD number, then ISD number will distribute it to the all the locations based on the turnover. So under the ISD returns, there are two category: eligible credit, ineligible credit. So you have to distribute the credit for the eligible credit separately. You have to distribute the credit for the ineligible credit separately. The reason is for distribution of ineligible credit is that the state portion pertaining to such service should go to the respective states where the service has been consumed. So it's for the purpose of revenue collection. Similarly, let's take another example: software, brand advertisement. All these are common services which has to be distributed through ISD mechanism. But when we talk about salary cost of the employees, the circular has given a benefit. No issues. Salary is not required to be included. Accounting impairment entries. There are certain accounting entries in your trial balance. So these are not required to be either routed through ISD or routed through cross charge. One of the interesting issue which arises is, in my previous slide, I specifically said for cross charge, if full credit is available, then circular is saying nil value is acceptable. Then for rental of head office, if I'm getting full credit available to the recipient, let me not cross charge it. Let me keep it as it is here. To counter that, department is coming and saying at ground level that this circular was meant to benefit for the past period where the people have done mistakes. Now you cannot adopt this nil value route. It will always be distributable at the ground level, that even if you're not charging rental services, you're not cross charging maintenance, etc., and taking a plea that full ITC is available, I will not cross charge and treat it as nil value, will always be subject matter of dispute at the ground level. So it is always advisable to avoid any dispute at the assessment and audit level. It is better to route this through cross charge mechanism. To conclude, cross charge versus ISD differentiation. as well as your goods credit is concerned, that can never be routed through ISD mechanism. That can only be routed through cross charge mechanism. The example of crane which we took. Invoice for services which are commonly consumed at head office as well as at branch office, that has to be routed through ISD mechanism. And invoices for services which are fully consumed at head office only, fully consumed at head office, that should be routed through cross charge mechanism. Moving on through the manner of distribution, the law is very clear. If your service pertains through 3 registration number, distribute to those 3 registration number only. If your service pertains to 1 registration number, then through ISD mechanism, you distribute that particular credit to your single registration number. If your service pertains to all the GST number, it is commonly used for all the GST and all the registration, then distribute it basis all the registration number. And how do you distribute? To distribute basis the turnover of the last financial year for the respective GSTN number. So if you are distributing it to the entire, say you have 26 registration number, you have an ISD number, you get an inward invoice on the ISD number, you have to distribute on to the entire 26 registration number if it is commonly used for the 26 registration numbers, and it should be distributed basis the turnover, GST turnover of the last financial year of this 26 registration number. In case the last financial turnover is not available, in such situation, you have to take the last quarter number. So turnover is the criteria for the purpose of distribution of the credit. Very important concept, reverse charge. Example like legal services. Now, legal services, you are taking services from some law firms related to your various matters in the organization, which are commonly consumed at various locations. Now, since these services are consumed at various locations, you have to route it through ISD mechanism. But very peculiar point to be noted, in ISD, you do not have a mechanism to pay under reverse charge. So if you're taking a legal services, that legal services is consumed across registrations, credit has to be distributed. But for distribution of credit, you first need to pay the tax under reverse charge. And in ISD, you cannot pay under reverse charge. So there is a specific rule 54(1)(a), which provides for the process to be followed in such cases. It says that for such services which are covered under reverse charge and whose credit has to be distributed to various other registration because it is commonly used, in such a situation, you pay the reverse charge under the normal GSTN number. So you got an invoice in the month of April. You have to pay the tax. When will you pay the tax for the April month? You will have to pay the tax for the April month by 20th of May. So you will pay the tax under the normal registration number. Then you will take the credit. You will file your GSTR 3B by 20th of May. And then you will distribute this credit. You will raise an outward invoice from your normal registration number to the ISD number after 20th of May, that is 21st, 22nd May, you will raise an output invoice from your normal number to the ISD number, and then ISD in its May month return will distribute this credit to the various registration. So in reverse charge mechanism, the transaction has to be routed through normal GST number. You have to tell your vendors, please raise invoices on your normal GST number in case vendors are registered. You have to pay reverse charge under the normal registration number, and then you have to raise invoice from normal registration number to the ISD number, and then from ISD you will distribute it to your various registration number. So it's an entire process which has to be followed. And very important point to be kept in mind is that there will be a time gap of 1 month at least, because say if you are receiving legal services in April month, you can pay reverse charge only by in your 3B on 20th of May, and then only you can take the credit in your 3B. Once you have taken the credit in your 3B, thereafter you will raise a GSTR 1 invoice, and then this routing will has to be undertaken. So there can be a gap of 1 month. There are specific format for ISD invoices and ISD credit note. Whatever ISD invoices you are raising from your ISD registration to your various registrations, there is a specific format. Rule 54(1) deals with it. So my ISD invoice should capture all the particulars required. And if I have distributed anything excess, then I can issue an ISD credit note. If I was supposed to distribute 100 rupees, but I by mistake distributed 120, I can simultaneously raise a ISD credit note also. So there are specific format particulars which we have to keep in mind. while preparing our ISD documentation. Another concept which we should keep in mind before we discuss the practical challenges being faced by the industry, there is a specific provision for penalty on wrong distribution of credit. If ISD is distributing anything wrong, if it has distributed anything wrong to the recipient, then obviously ITC recovery will be undertaken only at the recipient stage. ITC recovery will be taken only at the recipient stage, the recipient registration number, that it as your plant at your depots. ITC recovery along with interest penalty will be taken at that moment of time. Simultaneously, since you have wrongly distributed the credit, a penalty will be imposed on ISD also. So for wrong distribution, there will be two penalties. One at the recipient end because they have wrongly availed the credit, and accordingly recovery can be made along with interest and penalty. And apart from that, penalty on the ISD also to the extent of wrong distribution, even though it's a single mistake. But since you are two different number, two different penalties, and that's why we should take this ISD registration very seriously. Now with this, let us now practically see the challenges being faced by the industry players at ground level. The first is in the month of, let's take the practical approach, April month. I've taken the ISD 1st April 2025. I've given to my vendors. I've selected the vendors whose invoices has to be routed through ISD mechanism. I gave them my ISD registration number. Now vendor is issuing the invoices. I'm receiving those invoices in the April month. But my 6A, just like we have a concept of GSTR 2B versus 3B RICO, I reconcile my purchase register with auto-populated GSTR 2B. Similarly, there is a auto-populated GSTR 6A, which I can download by 11th or 12th of May only, the 11th or 12th of the following month. Now, I have received the invoices in the April month. When should I distribute this invoice? When should I distribute this credit to the recipient? Should I distribute this credit in the April month only by raising an output invoice from ISD number to various registration? In such a situation, I will not be in a position to reconcile my purchase register of ISD with the auto-populated 6A. Auto-populated 6A details gives details of the tax paid by the vendors under GSTR 6.1. So that details are not available by 30th of April. So should I distribute it basis the recording in my books, or should I wait for 11th or 12th of May, do reconciliation of my purchase register of ISD with auto-populated 6A, and whatever is getting reconciled, that only I distribute it in May month. If we see legally, nowhere the law says that you have to carry out 6A reconciliation. But please understand, after seeing the last 6-7 years of GST, one message is very clear from the government that I will not allow the credit until and unless supplier uploads in GSTR 1 and they pay the tax. Even though there is a lacuna under the law that 6A reconciliation is not required, but during the assessment and the audit stage, department will definitely check whatever you are distributing from ISD, whether the supplier has paid the tax or not. So what we are recommending is that as a prudent practice, it should be better that I perform my 6A reconciliation, and whatever invoices are getting auto-populated in 6A and matching with my purchase register, those invoices only I distribute it to the recipient. And wherever such invoices are not getting auto-populated, I contact my vendors and persuade them to upload such invoices. Moving on, turnover, we discussed that it's the last year turnover which we have to take. If last year turnover is not available due to various reasons, a new GST has been added, etc., then the last quarter turnover is something which we have to take for distribution mechanism. Another important part is identification of expenses. At this moment, it is recommended that everybody should look at your trial balance, check each of the expenses, audit expense, software expense, advertisement expense, professional expense, etc., and see what has to be routed through ISD mechanism, what has to be routed through cross-charge mechanism. Distribution of ineligible ITC, we already discussed that even ineligible ITC also has to be distributed. So you don't expense it out. Please distribute the ineligible credit, say insurance service credit, etc., which what all ineligible credit which are commonly used across the registrations. If there is an ineligible credit, say food expense at head office only, that is not required to be distributed. But if there is an insurance which is commonly used, life insurance, that is required to be distributed through ISD mechanism. Another interesting issue, if you have an SEZ unit, then the ITC has to be transferred to SEZ unit also. So generally supplies to SEZ is zero rated. If I supply to SEZ, I have an option to supply to SEZ whether goods or services under LUT on zero rated basis without payment of GST. But under ISD mechanism, there is no such relaxation. So if you have one of your registration is SEZ number also, so practically all your common services credit through ISG mechanism will be distributed to SEZ also. In such a situation, SEZ will take the input tax credit and will have to apply for refund in pursuance of their export transaction. So as of now, there is a compulsory distribution mechanism of credit from ISG to SEZ, and no benefit of zero rated benefit is not available at this situation. Another ground level difficulty is being faced by the taxpayers. What about my 180 days condition? Do I make, do I make payment to the vendor within 180 days? What about 16.4? Is there a time limit for availing and distributing the credit through ISG mechanism under section 16.4? What about common credit 42-43 reversal? What if supplier has filed GST 1 and has not filed GST 3B? So there are multiple questions being raised in industries. Let's discuss each of them one by one. As well as 42-43 compliance is concerned, reversal on account of exempt turnover, that has to be taken at the recipient registration number, that is at the plant level, the depot level. So I will distribute the credit from my ISG number to our respective registration, say my plant. And in plant, if I'm having my taxable turnover as well as exempt turnover, I will have to comply with my 42-43 compliance, proportionate reversal. So my proportionate reversal 42-43 compliance is at the recipient stage. Coming to non-payment within 180 days. If you don't make the payment within 180 days to the vendor, am I required to reverse the credit? Sir, ultimately, the court will read all the provisions harmoniously. The law says if you don't make payment to the vendor within 180 days, the registered person has to reverse the credit. Now, somebody can argue that ISD has not availed the credit. They has only distributed the credit. So no reversal requirement, etc., etc. But practically this credit has been availed at various registration number at the recipient location. So we would advise you to please keep a track of whether the payment has been made within 180 days. If it is not made within 180 days, then the reversal has to be done at the recipient location where the credit has been distributed to those locations where it has been ultimately availed. The credit has to be distributed, reversed, and whenever you make payment to the vendor, you can re-avail the credit. So rule 180 days compliance should be undertaken at the recipient location. Similarly, whether this time limit of availment of credit is applicable on ISG or not. Strictly speaking, we can legally argue, if we have to litigate, we have to contest, we can legally argue that time limit for availment of credit is not applicable on ISD. ISD is a distribution mechanism. Even if you see the definition of ISD, it uses the word distribute. So not applicable. But again, as a precautionary measure, we are advising all our clients that since ISD will become mandatory from financial year 25-26, so the entire process of credit distribution on your inward invoices till availment of credit at the recipient end, everything should be finished before November 2026. So whatever time frame has been given under 16.4 for availing the credit, even though invoice is routed through ISG mechanism, as a precautionary measure, let us comply with that. Let us avail those credit within the time limit. In case there is a litigation issue, I forgot to avail it, then we can definitely go and argue. But as a precautionary measure, it is advisable to implement system in a manner that all these conditions are being implemented. So we have to keep a proper record of all these compliances, whether the supplier has paid the tax, whether 180 days reversal done, whether time limit is applicable or not. Because what will happen eventually is that during your assessment at the recipient location, you will find ISG invoices credit taken. So they will say, you have taken the ISG invoice credit. Please show me which credit does it pertains to, whether payment to the vendor has been made separately or not. whether the supplier has paid the tax or not. So it is advisable to maintain proper records because this will be eventually used at ground level during assessment at the recipient location also. Then we have accounting related challenges also. Do I need to distribute the credit only, or in my internal accounting system I should distribute the expense also? So all these calls have to be taken and finalized. So when we talk about the way implementation, the first step is to see whether you have multiple registrations, you are doing billing from various registration. If yes, obtain ISD number, identify the expenses which are commonly used across ISD numbers across various registration, identify those vendor, communicate to those vendor, tell them this is my ISD number, please raise invoice on this ISD number, and accordingly implement your ISD in your ERP system. You have to have a proper ledgers accounting codes opened for the ISD credit and distribution credit. There should be a system of generating ISD invoice. You should have a system of preparing ISD returns, etc. All these have to be linked through your GL and ERP system. Proper training should be given to the staff to check whether this has to be routed through ISD mechanism or not. Similarly, in case of wrong distribution, there should be a mechanism to issue ISD credit note also. So all these steps have to be simultaneously followed, and simultaneously you also have to undertake the cross-charge compliances. With this, we end our first topic, and then I hand over the session to Chetan Agarwal, who will be covering the remaining two topics. And in the end, we will be taking all the question and answers coming in the chat box. Thank you. Over to you, Chetan. You can share the screen. I'm stopping my screen.
Thank you, Tushar. I am sharing my screen. So the next topic which we are covering now is year-end compliances for the financial year 24-25 from GST perspective. So we are standing at the end of financial year 24-25, and like earlier financial years, there are certain year-end activities. There are certain activities to be performed in this financial year also. So why this? Before proceeding further, we should understand why this year-end activities are important and why it is required to be performed. So there could be many reasons, but three reasons which I can think which are more relevant are: first reason is the government has provided certain waiver schemes, and to avail those waiver schemes, the deadline is 31st March 2025. Therefore, if any taxpayer wants to avail benefit of those waiver scheme, then the required activity is to be performed by 31st March 2025 only. Those schemes we will discuss later. Second reason why the year-end compliances are necessary, that there are certain compliances which will be performed in the next financial year, so that is 25-26. But in order to smooth functioning of those compliances or smooth compliance operation of those compliances, we have to undertake certain activities at this point of time. Like if any taxpayer wants to export goods or services in the next financial year without payment of tax, then that taxpayer has to file a LUT application by 31st March of this financial year. Then the next reason is that we have covered.
Your screen is not changing.
Hello.
Your screen is not changing.
I will change that. I will change that. Then the next reason is that we have almost completed the entire financial year 24-25, and we have filed the GST returns for the period from April to February. Only March returns is pending. While filing these returns, there could be certain unintentional errors which would have been committed by our tax team or those who are taking care of the compliances. There could be cases where we would have made excess payment of tax or short payment of tax, or there could be cases where we would have availed excess ITC or short ITC. So in order to mitigate the risk of notice from the department or tax demand from the department. We should correct this error or short excess payment of tax or short or excess availment of ITC in this in the return of March month, so that if any scrutiny is conducted by the department for this particular financial year, it should match, and we could avoid the notice from the department. If still in case department is issuing that any notice, then we should be in position to defend our case. So the first compliance that need to be done at this point of time is regarding ISD compliance. So as mentioned by Tushar in the earlier part of this session, that ISD is going to be implemented with effect from 1st April 2025. So for this, it is necessary to obtain ISD registration right now and communicate it to the vendors, so that if all the vendors who are providing services and the services which are covered under ISD mechanism should be issued on the ISD registration only and can be distributed properly to the concerned recipients. Second aspect which need to be covered, or second compliance which need to be done at this point of time, is filing of LUT application before 1st April 2025. Any taxpayer who wants to export goods or services in the next financial year 25-26 without payment of GST shall file this LUT application before 1st April 2025. Then the government has introduced a GST amnesty scheme for waiver of interest and penalty in respect of tax demand under section 73 for the financial year 17-18, 18-19, 19-20. This is a conditional waiver subject to the condition of payment of entire tax amount by the taxpayer. Any taxpayer who wish to avail the benefit for of a waiver of interest or penalty in respect of demand issued under section 73 is required to pay the entire tax liability by 31st March 2025, and thereafter the taxpayer has to file waiver application in form SPL01 or SPL02 as may be applicable by 30th June of 2025. In case the taxpayer wish to avail benefit of this waiver scheme, but he does not pay the tax by 31st March 2025, then he would not be eligible to avail benefit of this waiver scheme. Then the government has also provided waiver scheme for late fees for delay in filing of GSTR 9C. There was ambiguity regarding the late fees which is applicable on 9 and 9C. There was ambiguity that whether separate late fees will be applicable on delay in filing of 9 and 9C or single late fees will be applicable. So the government has issued clarification white circular number 246, whereby it has been clarified that late fees under section 47 is applicable on the complete filing of delay in complete filing of annual return, and that annual return includes both GSTR 9 and 9C. So in case of taxpayer where only GSTR 9 is applicable, late fees will be payable, and in case of the taxpayers on whom both GSTR 9 and 9C is applicable, so late fee will be payable or calculated till the filing of GSTR 9C. So there could be broadly two scenarios. In case of taxpayers in whose case GSTR 9C is not applicable, and second case of taxpayers in whose case GSTR 9C is also applicable. So in case first scenario where GSTR 9C is not applicable, in that case late fee will be applicable from the due date of filing GSTR 9 till the actual date of filing GSTR 9. Second scenario is where 9C is also applicable. So there could again be various cases. First case is GSTR 9 is filed on due date and 9C is filed after the due date. In that case, late fees has to be calculated from the due date of filing of GSTR 9 till the date of filing of 9C. There could be situation that GSTR 9 was not filed on due date. That is, it was filed after due date and GSTR 9 was filed, 9C was filed further after further delay. So the late fees will be again calculated from the due date of filing of GSTR 9 till the date of filing till the date of filing of 9C. Now the government has provided waiver for late filing of GSTR 9C. So in such case, what the actual relief is provided by the government, that suppose if you have filed your 9 on due date and you have delayed in filing 9C. So, and in case you are filing this 9C on or before this 31st March 2025, then the taxpayer will get waiver from late fees from the due date of filing 9 to 9C. Second scenario, if the taxpayer has suppose filed 9 on 31st January, due date was 31st December, and but he has filed the GSTR 9 on 31st January and 9C was still not filed. So if that taxpayer is filing 9C by 31st March 2025, then late fee will be applicable only for the 1 month, that is from 1st January to 31st March, 31st January, that is delayed file, and the late fees for calculated from 1st February to 31st March, that is the date of filing of 9C. Till for that period, late fee will be waived. Then the next compliances that is required to be done by the GTA goods transport agencies. So generally the tax liability in respect of goods transportation service provided by goods transport agency is discharged by the recipient on reverse charge basis. But recently the government has provided option that the GTA can opt for payment of GST liability under forward charge scheme. So in case any GTA wishes to discharge GST liability under forward charge scheme, then they can opt for this option by providing a declaration by 31st March 2025. In case the GTA has earlier opted for the forward charge mechanism, but now wishes to revert back to reverse charge scheme for the financial 2025-26, he can file, the GTA can file this application for this aspect also by 31st March 2025. Currently, the next issue is related to the GST rate applicable on restaurant service provided by the restaurants located in hotels. Currently, GST liability in respect of restaurant service provided by the restaurants located in hotels is linked with declared tariff of the unit accommodation provided by such hotels. If the declared tariff is more than 7,500 rupees, in that case the applicable rate of GST on the restaurant service is 18% with ITC. And in case the declared tariff of unit accommodation is less than 7,500, then in that case applicable rate of GST on restaurant service is 5% without ITC. Now the government has made certain amendments which will be effective from 1st April 2025, and through this amendment government has de-linked the taxability of restaurant service from declared tariff and linked it with actual value of supply of unit accommodation provided by the hotels. Therefore, from 1st April 2025, if the value of all the unit accommodations services provided by the hotel during the financial year 24-25, that is the earlier financial year for 25-26, during that year, if the unit value of supply of all the unit accommodation in 24-25 was more than 7,500, in that case, applicable rate of GST would be 18% with ITC. And in case unit value of supply of all the units of accommodation in that hotel during the financial year 24-25 was less than or up to 7,500. In that case, applicable rate of GST is 5% without ITC. However, the government has also given option to such restaurants located in hotels having actual value of supply less than 7,500 to discharge GST liability at 18% without ITC. Such restaurant can opt for this rate of tax by filing a declaration by 31st March 2025 and declaring themselves as specified premises. If they are declaring that we should be considered as specified premises by 31st March 2025, in that case, they can discharge GST liability at the rate of 18% with ITC. Why this was required? Because in few cases, what is happening that the restaurants were providing both taxable service in respect of which ITC was eligible, and they are providing this restaurant service where applicable rate was 5% without ITC. So they have to comply with rule 42-43 reversals for in respect of common ITC. Now, if they opt for this 18% rate, then in that case, they can avoid this compliance of 42-43. Secondly, if they are making this declaration, that then this declaration will be applicable for further years also, and this can option restaurants can withdraw by filing another declaration to not treat them as specified premises. So the restaurant can file after few years, if the restaurant feel to opt 5% without ITC option, in that case they will again file a declaration that we should not be considered as specified premises. Thereafter they can again discharge GST liability at the rate of 5% without ITC. Time limit for generating e-invoice. So currently the government has imposed restriction on the taxpayers with aggregate turnover of 100 crore rupees that they can report e-invoice on IRP within 30 days from the date of invoice. If they wish to report invoice on the IRP portal or they want to generate e-invoice after the date of 30 days from the date of invoice, then they cannot do so. Now, from 1st April 2025, the government has extended or imposed this restriction on all the taxpayers who are having aggregate turnover of rupees 10 crore and above. So every taxpayer who are having aggregate turnover of 10 crore or above in any of the preceding financial year till 31st March 2025, they have to report e-invoice on the IRP portal within 30 days from the date of invoice. Then next compliance is composition scheme. So the taxpayer who wish to opt for composition scheme for the financial year 25-26, they have to file intimation for opting such scheme in form GST CMP 02 by 31st March 2025. If the taxpayer who is opting for composition scheme, they are also required to file a statement in GST ITC 02 form, ITC 03 form for reversal of ITC, because the composition dealers are not allowed to avail ITC. Therefore, they have to reverse the ITC in respect of stock or any other goods which they have claimed. So they have to file form ITC 03 within 60 days from the commencement of financial year 2025-26. Then the next compliance is opt out for quarterly filing. So the taxpayers who wish to opt in or opt out from the quarterly return monthly payment scheme, they can choose for quarter one. They can choose this scheme for quarter one, that is April 25 to June 25, and for opting in or opting out from this scheme, the last date is 30th April 2025. So by that date, the taxpayer who want to opt in or who want to opt out from QRMP scheme, they should opt the option. Then the next compliance is regarding filing of annual return or annual road-tape return. And the due date for filing annual road-tape return for the financial year 23-24 is 31st March 2025. However, government has extended this due date till 30th June 2025. Therefore, annual road-tape return for the financial year 23-24 should be filed by 30th June 2025. Next compliance is IAC renewal. IC renewal application should be filed by 30th June 2025. As per GST law, every taxpayer should follow a series which document series which is unique for a particular financial year. Therefore, it is advisable for the taxpayers to implement new document series for the next financial year with effect from 1st April 2025. So as we discussed, beside these compliances, we have to also ensure that while we should correct any error which we have committed while filing the GST returns for the financial year 24-25, and we should discharge any tax, short paid tax or short excess availed ITC, or we should avail any short availed ITC. So all this we have to ensure, and we should ensure that we should do this exercise in March 25 return being the last return for this financial year. So for this purpose, first we will discuss the activities which need to be performed for outward supplies. So with regard to outward supplies, the first thing which is advisable to be done is reconciliation of GSTR1 and GSTR3B supplies. So the first thing which taxpayer is required to match that the turnover and the tax liability which is reported in GSTR1 return with the tax turnover and tax liability reported in GSTR3B return. And if there is any short payment of tax, we should identify what is the reason, and if it is payable, we should pay the tax. And if it is excess payment of there is excess payment of tax, then adjustment of same should be made in the next return in which it is possible. Then we should reconcile our turnover with our books of accounts. There are certain transactions which are correctly which is recorded as revenue, and the tax liability with regard to those turnover is also recorded. But there are certain transactions which are not recorded as part of revenue. There are like notice pay recovery or certain revenue which are netted off from expenses or disposal of or sale of capital assets. These all are not forming part of your revenue. Therefore, we should reconcile our turnover and tax liability which we have reported in GSTR1 and GSTR3B return with the tax liability recorded in the books of accounts, and then we should verify whether there is any liability with respect to any revenue like this capital supply of capital goods or notice pay recovery or any expense which is netted off from the expenses. And we should check whether we have properly reported and paid GST liability on such supplies also or not. In case we have not deposited tax on that, we should report that transactions in GSTR1 and GSTR3B of March return. Then second, next reconciliation which is required is the transactions or supplies which are recorded in the books of accounts and which are reported in GST returns with our IRM, that is invoice data. Department is asking this kind of reconciliation also, and in case of non-compliance, they are imposing penalty on account of non-compliance. Therefore, we should check, and if possible, we can generate e-invoice. Then the next compliance which is required to be done is reconciliation of e-way bill portal with the transactions which are reported in GST return. So again, this is a compliance which is mandated under the GST law, and in case if we have not generated e-way bill in respect of any transaction on which e-way bill is applicable, then department can impose penalty. Also, e-way bill is one of the most important document to substantiate the actual movement of goods. Either it is receiving of goods or delivery of goods. It is one of the most important documents to substantiate the movement of goods. Therefore, we should see whether or verify whether we have generated e-way bill for all the supplies in respect of which it is applicable. Then the next thing which we should verify is, in case we are making supply of services and have received advances in respect of those services. So we should verify whether we have discharged due taxes on such advances received for supply of services. And we should also check whether we have adjusted those tax paid on advance in the subsequent GSTR1 when the invoices are issued. Then there are certain other factors which need to be examined, like we should also see whether we have sent any goods or capital goods to job work, and if we have sent it, whether we have received it within 1 year or 3 years. In case of goods, it should be received within 1 year, and in case of capital goods, the goods should be received back by the principal supplier within 3 years from the date of dispatch. So in case we have not received this, then such transaction, such delivery of goods to the job worker will be considered or deemed as supply. In that case, we have to raise invoice and discharge applicable GST on such deemed supply of goods to job worker. Then next, coming to the next part is activities to be performed from the perspective of in respect of invoice supplies. So certain reconciliations we are performing every year. First thing is reconciliation of purchase register with ITC claimed in GSTR 3B. Then second reconciliation is ITC which is availed in 3B with ITC reflected in 2B. This is one of the most crucial issue or crucial issue which is being raised in almost all the notices issued by the department. In almost every notices, department is examining this factor, whether you have availed ITC more than the amount which is reflecting in 2B. If yes, then they are proposing demand for the debt. So we should reconcile our purchase register with ITC claimed in 3B and those reflecting in 2B. In case we have claimed excess ITC, we should reverse the ITC, and in case we have claimed short ITC, we should identify the reason why we have not claimed that ITC and claim in the subsequent return. If we are reconciling our purchase register with 3B, and if we identify that there are certain invoices which are recorded in our purchase register but it is not reflecting in 3B, then we should communicate to the vendor for timely reporting of those invoices. And in case there are certain transactions which are reflecting in our 2B but we have not recorded in our purchase register, then we should discuss this transactions with our accounts team or other internal departments, that so as to why this is not recorded and why to avoid loss on account of non-recording of these transactions in the purchase register. Then we should reconcile this our ITC which we have claimed with our e-way bill. because while scrutinizing the transactions, department is also examining that whether the taxpayer has actually received the goods or not. And as said earlier, that e-way bill is one of the important documents to substantiate that the goods was physically or actually received by the recipient. Therefore, we should also reconcile our purchases with the e-way bills, and in case of supplies in respect of which e-way bill is not available, we should ask our vendor for the reason why it is not generated, and we can also uh, ask them for indemnity in case penalty is imposed by the department. Then the next thing which we need to verify is credit notes which are appearing in GSTR 2B but which is not recorded in the books of accounts. So there are cases where certain credit notes are appearing in 2B but they are not recorded in the books of accounts. So we need to identify the reason of those credit notes. We have to communicate with our vendors that why those credit notes are reported in GST returns and why they have not provided copy of those credit note to us. Because if we are not reversing those credit notes at the time of assessment, department can ask reversal on account of such credit notes, and such credit notes uh, may not be related to us, but still we may have to reverse the ITC. Then we have to also review and scrutinize the ITC which was availed by us, because there could be certain ITC which is ineligible in terms of section 17(5), but we have availed that ITC. So we should scrutinize and verify whether any ITC which is ineligible in terms of section 17(5) has been availed by us, and if yes, we have availed that, in that case we have to reverse that ITC. Then we have to also track the 3B filing status of the vendors, because as per rule 37A, taxpayer can claim ITC on the basis of invoice reflected in 2A. But in case the supplier has not filed 3B, then the recipient has to reverse that ITC by September of the succeeding financial year. So in that case, though we have claimed ITC on the basis of reconciliation with 2B, but we have to verify whether all those suppliers have filed their 3B or not. In case they are not filing, then we need to contact them and ask them to file their 3B also. The next thing is that in certain cases we have observed that few taxpayers are not following the new method of reporting ITC in table 4 of GSTR 3B even now also. So from the next financial year, those taxpayers can start following the new approach for reporting ITC details in table 4 of GSTR 3B. Then next thing is to verify whether we have paid consideration to all the suppliers within 180 days from the date of tax invoice. In case we have not made the payment, we should reverse the ITC as soon as possible, as it may attract interest liability. Then coming to reverse charge mechanism, we should reconcile our reverse charge liability which we have discharged in GSTR 3B return with the reverse charge liability recorded in the books of accounts. If there is any variation, proper action is required to be taken. If we have paid short tax, we may pay that tax, and if we have paid excess tax, we can make adjustment of that excess tax in the subsequent returns. We should scrutinize our trial balance and to check if we have recorded the correct reverse charge liability in respect of the transactions which are covered under the reverse charge mechanism, like GTA, rent a cab, legal service, government service, service received from the directors, import of service, rental service received from unregistered person. So we need to check whether all the cases in respect of which RCM is applicable, we have correctly recorded the RCM liability in the books of accounts, and whether we have discharged that tax liability correctly. Then we should ensure that we should have issued self-tax invoice or self-invoice and payment vouchers in respect of the reverse charge supplies received from the suppliers. In case of supply received from unregistered suppliers, we are required to issue self-invoice and payment voucher. And in case of suppliers registered under GST, payment vouchers are required to be issued and reported in GSTR1. Then we should also reconcile the amount of tax liability which was discharged under reverse charge mechanism in 3B with the ITC claimed in respect of RCM transactions. So there should not be the case that we have discharged 100 rupees liability and we have claimed ITC of 110 on RCM transactions. In case we have claimed excess ITC, the reason for the same should be identified. Such excess ITC may relate to earlier financial also. So that needs to be identified. In case we have availed excess ITC, then we need to reverse the same. We should also ensure that we have not claimed any ineligible RCM ITC. Then certain other compliances which are required to be done at this time is to identify the transactions in respect of which we need to claim refund, we need to file refund application, and it is to be filed within 2 years from the relevant date. Then we should also reconcile our electronic credit ledger and cash ledger with the ITC and cash balance ledger as per the books of accounts. There should be no variation, and in case of variation, proper reconciliation should be prepared. Then we should also reconcile our TDS and TCS credit on the GST portal with the TCS and TDS credit recorded in the books of accounts. At the time of obtaining registration or adding additional place of business under the GST registration, we are providing uploading rent agreement of the GST portal. Sometimes it get expired and this does not come to our knowledge, but if during the audit department seek this rent agreement copies also. So we should ensure that in cases where the rent agreement was entered earlier, it should not be expired, and in case it is expired, the same should be renewed timely. So now we are coming to our next topic, invoice management system. Since the inception of GST, department and government has taken various measures to regulate and streamline the availability of ITC. Like first they have introduced GSTR 2A, then Rule 36(4), then GSTR 2B. Now they have implemented this invoice management system. So what is the objective of invoice management system? Invoice management system is a communication process between the supplier and the recipient, and it is operated through portal. The prime objective of this IMS is to facilitate reconciliation of transactions, inward supply transactions, which is recorded in the books of account and of the recipient, and the transactions which are reported by the suppliers on the GST portal through their GSTR1 or other returns, and to ensure that the recipient is taking ITC only in respect of those transactions which are matching, that is the transactions which is reflecting on the portal as well as recorded in the books of accounts. This will reduce the errors and reduction in notices. IMS facility is introduced with effect from October 2024. Currently, it is not mandatory, but it is at the option of the taxpayers to either follow this or to follow this from the date when it will be made mandatory. So what is the mechanism, how it will work? IMS, how it will work? So IMS is like a separate bucket. What will happen when a supplier files GST, supplier save any invoice in GSTR 1, 1A or IFF return, then it will get auto-populated in the IMS dashboard of the recipient. After that, the recipient has to take 4 actions: accept, reject, or not take any action, or keep it as pending. So supplier, when supplier is saving or uploading any invoice details, credit note, debit note details in its GSTR 1, 1A or IFF return, that will get populated in IMS, and basis that the recipient has to take action. If the taxpayer is accepting that invoice, then that invoice will move to GSTR 2B as ITC available, and from there it will move to GSTR 3B ITC table number 4 of GSTR 3B. If the taxpayer is rejecting that document, in that case, this document will also move to GSTR 2B, but under ITC not available section. And that transaction, since ITC is not available, that transaction will not get transferred to GSTR 3B. In case the taxpayer is not taking action in respect of any documents, then it will be deemed that the taxpayer or the recipient has accepted that document. In that case, again, it will get transferred, the data will get transferred in 2B ITC available section, and from there it will be transferred to GSTR 3B ITC table. If the taxpayer or the recipient is opting pending action, then in that case the information of that particular transactions will not flow to GSTR 2B and also not to GSTR 3B. In respect of these transactions, pending transactions, the recipient can take action in the future return. What all transactions or what all documents will reflect in IMS? So all the invoices which are reported by the suppliers in GSTR 1, 1A and IFF, like invoice, credit note, debit notes, that will reflect in IMS. But the invoices which are covered under reverse charge mechanism, that is, any supplier has issued invoice to us and that is covered under reverse charge mechanism, we have to pay tax liability on RCM basis in respect of that invoice. In that case, that invoice will not reflect in IMS and will directly reflect in 2B. Second case is invoices which are ineligible. So invoices in which POS is different from the state of recipient, that will be ineligible, and that will auto-populate in 2B as ineligible ITC. That will not reflect in IMS. Again, invoices which are time barred as per section 16.4, that will not reflect in IMS and will directly reflect in GSTR 2B of the recipient. So this we have already discussed, that if the recipient is accepting any record, then that record will reflect in GSTR 2B ITC available section, and then from there it will auto-populate in GSTR 3B. If the recipient is rejecting any invoice, then it will reflect in GSTR 2B ITC rejected section and it will not auto-populate in GSTR 3B. If the taxpayer is keeping the record pending, in that case, the recipient can take action on those records in the subsequent GST returns. In case the recipient is not taking any action, then it will be deemed to be accepted and it will reflect in ITC available section of GSTR 2B and will also auto-populate in GSTR 3B. So when the invoice or documents reported by the supplier will reflect in IMS. So when the supplier is uploading or saving that data on its portal, in its return on the GST portal, then it will reflect, and on that the recipient can start taking the action. But that document or details of those documents will auto-populate in 2B only after filing of GSTR 11A or IFF return by the supplier. In case supplier has saved any invoice but it has not filed the GSTR 1 return, then it will reflect in IMS and the recipient can take action on that, but that in detail of that invoice will not flow in GSTR 2B until and unless the supplier is filing the GSTR 1A or IFF return as applicable. So there are certain situations or certain documents in respect of which pending action is not allowed. First one is original credit note, in where the supplier has reported or reported credit notes, then in respect of that credit note, the recipient don't have any option to keep it pending. The recipient has to either accept or reject that credit note. Second scenario is upward amendment of credit note. If the supplier has issued credit note earlier and now it has reported upward amendment in that credit note, then the recipient cannot keep it pending. This is irrespective of whether the recipient has originally accepted or rejected whatever action he has taken earlier, because in case of credit note, you cannot keep it pending. So you have to take some action. Either you have to accept that or reject that. Whatever action you have taken, but if there is upward amendment of that credit note, in that case, you cannot keep it pending. In respect of this amendment also, the recipient has to take action. Then third scenario is downward amendment of credit note. In case if the original credit note was rejected by the recipient, then any downward amendment by the supplier would have to be rejected, either accepted or rejected by the recipient. It cannot be kept pending. Then fourth scenario is downward amendment of invoice or debit note. If the recipient has accepted original invoice or debit note and has filed its GSTR3, that it has claimed ITC in respect of that invoice, and now the supplier is reporting downward amendment of invoice or debit note. In that case, the recipient cannot keep this transaction pending. It has to take action on this document. GSTR 2B will be auto-generated on 14th of the subsequent month. So the recipient can take action in respect of the invoices reflecting in IMS prior to that also, and basis that action or in respect of the transactions which or in respect of which no action has been taken, on that basis 2B will be generated on 14th of the subsequent month. In case the recipient has taken some action prior in respect of any document prior to 14th and 2B generated, after that he changes his action. Firstly, he has rejected that, but after that 2B generated, now he want to accept that invoice. In that case, he can change his action after 14th, but before filing of 3B of that month. In case he is changing the action which he has already taken on that particular record, in that case, the recipient has to recompute that GSTR 2B after that action taken by him. In case 2B generated automatically and the recipient is taking any action, first he has earlier he has not taken any action in respect of that document prior to 14th, that is prior to generation of GSTR 2B. But after 14th, after generation of 2B, the recipient has taken some action in respect of any record. In that case, the recipient has to recompute 2B prior to filing of GSTR 3B. And GSTR 2B of a particular month can be generated only if GSTR 3B of earlier month is filed. In case GSTR 3B of earlier month is not filed, GSTR 2B of next month cannot be generated. This is the movement of records, how records will move. First movement is movement of records to IMS dashboard at the time of saving of record by the supplier in respective form, and recipient can take action on such record in IMS. So as soon as the supplier is saving the record in its GSTR 1A or IFF edge, maybe the return edge may be applicable. As soon as he is saving the record in his return, in that case, that will be available to the recipient in IMS, and the recipient can take action on that. Record will auto-populate in 2B after filing of return in GSTR 1 IFF 1A by the supplier. Recipient will, after saving of that data, recipient can take action, but it will move to 2B only after filing of corresponding GSTR 1 IFF or 1A return by the supplier only. In case the supplier has only saved the return but has not filed his GSTR 1 or the applicable return, in that case data will not flow from IMS to GSTR 2A return, 2B return. All the accepted and deemed accepted rejected record will move out of IMS after filing of 3B. So all the documents in respect of which the recipient has taken any action, accepted, rejected, or not taken any action, which will be considered as deemed accepted, that will move out of IMS if after filing of GST 3B. Those records will not be available in IMS for future period. Pending records will remain in IMS dashboard, and this record action can be taken in this record in respect of these records in future returns. Then there could be scenario that the supplier has issued one document invoice and subsequently amended that record. So there could be two scenarios. One is that original and amended records belong to two different GST return period. That is, original invoice records are reported in one tax period and amendment is reported in another return period. What to do in those cases? So in those cases, what was clarified by the department that before taking action on the amendment record, it is mandatory to take action on the original record. First, you have to take action on the original record and file 3B. After that, you can take action in respect of the amendment record. Without taking action on the original record, system will not allow to take action on the amended records. Second scenario is both the original and amended records belong to the same 2B return period. That is, the recipient has, supplier has issued invoice in a tax period and has also recorded the amended in the amended record in the same return period. In that case, what will happen? Action which will be taken on the amended record will prevail over the original record. What would be the impact of actions taken by the recipient in respect of records reported by the supplier? Or what are the situations in which case the liability of supplier will increase? So first scenario is rejection of original credit note. Supplier has issued credit note, reported credit note in the GST return, and thereby reduced its tax liability. And if that credit note is rejected by the recipient, this liability will be added to the outward liability of the supplier in the next 3B return. Then second case is upward amendment of credit note rejected by the recipient. So in case the supplier has earlier issued credit note for 100 rupees along with tax, now the supplier amended that credit note to 110. Now this amendment is rejected by the recipient, then that will increase the tax liability of the supplier in next GSTR 3B return. Downward amendment of credit note. If the supplier has earlier issued a credit note and it was rejected by the recipient, supplier again upload the downward amendment of that credit note on the GST portal. It is again rejected by the supplier. In that case, this will increase the tax liability of the supplier in the subsequent tax period. Fourth scenario is downward amendment of invoice or debit note. In case the downward amendment of invoice, suppose earlier the supplier has issued one invoice in which it has reported taxable value of 100 and tax liability of 18 rupees. Now in next return, the supplier has reported downward amendment of that invoice to 80 rupees. So the supplier has reduced his liability by taxable value of 20 rupees and the corresponding tax liability. If the recipient is rejecting that downward amendment reported by the supplier, in that case, the liability this rejection would increase the tax liability of the supplier, and the liability will increase in GSTR 3B of the subsequent tax period of the supplier. So there are many issues related to IMS facility because this is a new facility and there are certain ambiguities also. So certain FAQs department has provided and certain issues are arising while complying with this facility. So we have covered a few these questions here and others we can discuss separately. First thing, whether all the data available in IMS can be downloaded? Yes. How many times GSTR 2B can be generated? So GSTR 2B can be generated multiple times by the recipient, but it should be generated prior to filing of GSTR 3B return. Is there any scenario where draft 2B will not be generated by the system on subsequent 14th of subsequent month? So in case GSTR 3B return of the earlier month is not filed, in that case, GSTR 2B will not be generated by the 14th of subsequent month. In that case, the recipient has to first file 3B of earlier month. Thereafter, draft GSTR 2B can be generated. What if I have taken an action on a document in saved status, but the same is edited or changed by the supplier before filing his GSTR 1 return? So supplier has saved certain records in its GSTR 1 basis that details of those records is reflecting in my IMS and I have taken action on that. After that, supplier has filed his GSTR 1 but have edited or changed details of that records in its GSTR 1 while filing that return. So in that case, the action taken by the recipient would reset. That is, the recipient has to again take action on that document. What happens if the recipient reject a record? If the recipient reject a record, then it can increase the tax liability of the supplier. And again, in the FAQs, department has provided certain scenarios. What happens when an action is taken by the recipient on the documents reported by the supplier? What would be the implications? So there are certain scenarios they have covered in the FAQs. Suppose if we are discussing the first scenario, record type is B2B. Suppose B2B invoice. So this is the original invoice reported by the supplier. So the recipient has can take three actions, either to accept, reject, or pending. If he is accepting that B2B invoice, original invoice, in that case, the recipient will get full amount of ITC in respect of that invoice, whereas the supplier would be liable to pay full amount of tax in respect of those invoices. Then the second scenario is B2B amendment or debit note or invoice upward amendment. In that case, if the original invoice was accepted by the recipient would have got full ITC of the amount charged by the supplier on the original invoice. And then recipient can take three actions on the amendment, upward amendment, either to accept, reject, or pending. In case the recipient is accepting the upward amendment, the ITC, it will avail the increased ITC of increased tax liability reported by the supplier. In case the supplier recipient is rejecting or pending, no impact will be on the recipient. It cannot take ITC of that, but the liability of supplier in respect of this upward amendment would be there. Second scenario is if the recipient has rejected the original invoice. In that case, it would not have availed the ITC of that invoice. Then now on the upward amendment of this B2B invoice or debit note, in case the recipient is accepting the record, in that case, it will be eligible for full ITC. But in case the recipient is rejecting or keeping it pending, this B2B amendment, upward amendment, in that case, no ITC will be available, but the supplier will be eligible for will be liable for making the payment of tax liability on the upward revision of the transaction. So here the department has given various scenarios that you can analyze. Over to you, Tushar. Complete from my side.
Thank you, Chetan. Thank you so much. We can exit the screen. Let's share the question and answer. Let's discuss the question and answer on the screen. The first question is whether legal services has to be routed through ISG mechanism or cross-charge mechanism. If this legal services is being used commonly across the registration, in such a case, the same should be routed through ISG mechanism. But again, as we discussed, there is no mechanism under the ISD to pay reverse charge. So you have to take a normal registration number, pay reverse charge, raise the invoice from normal registration to ISD, and then route the credit. Another question is related to the royalty, whether a royalty should be routed through ISD or cross charge. Again, if this royalty is being used, say, for technology development or for manufacturing processes across the manufacturing sector, in such a situation, you have to pay under reverse charge and route it through ISD. Is IRN required for ISD invoice? No, IRN is not required for ISD invoice. As of now, e-invoice is not mandatory for ISD. Further, for invoice management system, we would be having a detailed session also at later part of the year. If there are any further questions and answer, you guys can write in the chat box. We are also typing our email ID. In case there is any further question, you can mail us at this email ID.
One question is there, is IRN required for ISD invoice? It is not required in our view because ISD invoice is not issued for supply but for distribution of ITC. So IRN is not required.
What if I am not having the turnover? My business is new. Say my business started from April. My business is new. So practically what will happen that your April, May, June, you should distribute this credit in the month of July once you get the last quarter turnover. IMS is not working properly in GST software. That's the practical issues being faced. And that's why IMS hopefully will be implemented at over the period of time. Gauravji saying if no turnover in 2 years, it's okay. You are not having a turnover, but now since from April 2025, you will start having the turnover, then you can start your distribution process from July, taking April to June as the turnover base. I think we have already run past the time. Now over to the panelists for the final remarks. Thank you so much.
Yes, sir. We thought you should take all those questions. Thank you all for taking the time be here. I would like to thank both the speakers, Mr. Tushar Agarwal and Chetan Agarwal ji, for insightful session. If you have any queries or questions, you can directly mail to Tushar ji. The ID is tushar.agarwal at webtel. Oh, sorry. tushar.agarwal at tatwamgroup.in. And you can also mail us at events@webtel.in.
And also please share the PPT to all the participants.
Yes, sir. I will share.
Thank you. Thank you, everyone.
Thank you, everyone.
Thank you. Thank you.